Looking at the markets ending down in yesterday's trading session, but marginally so. But let's look at the secondary market. We have seen treasury bill rates there, as well as bond rates are falling off. We had the 91-day treasury bill down at 8.58%, currently below the repo rate at this stage.
Yes, I think the key news this week was the very decisive move on the interest rate market, both on the 2-year bond and the 91-day treasury bill. We had bids of almost 30 billion on the 2-year bond and only 16 billion accepted. I expect that a lot of that 15 billion that was turned back was probably going into the secondary bond market, and we saw bond market turnover move up slightly or significantly yesterday. We also saw an increase in local institutional investors' participation in the equity market, which is also a pointer to investors looking for opportunities as interest rates fall and looking at other markets in order to generate returns.
Looking at other markets, I think the equity market would be the next place, the best place to be going to. If you look at the equity market, where are investors finding value at this stage?
I think the banking sector is one of the favored areas this year. As interest rates fall, interest rates margins tend to widen. I think also the fall in interest rates goes well for the trading books of the bond trading books for the bonds in terms of valuation. So there's a reasonable expectation that we will see much better returns on the banking sector this year. Going on to the industrial cement sector, I think Athi River mining looks promising in terms of growth. They have a lot of capacity coming into the market, or they're building a lot of capacity in the next 1 year, which should see significant growth in turnover. We're also seeing some of the investment stocks being significantly undervalued. Centum's gone down to about 11.5 against an NAV of about 20 shillings. And we are seeing increased interest in Centum at these levels. So it looks like bargain hunters are then looking at what's looking good value and shows promise on a long-term basis.
When we had our chat a little earlier, you said that Centum is also one of the stocks that you have on your radar, as well as NIC Bank.
Yes, NIC Bank's got the rights issue coming up at a significant discount to the current market price and is looking attractive. On a valuation basis, it's probably the better valued of the banking sector stocks. And I think also showing good promise in terms of growth. So it looks like investor interest on NIC Bank is quite promising.
A company that's just come out with results is East African Cables. I'm not sure if you've had a look at the results, but full-year profits up 24%, really on the back of growth in products and markets across the board. Can you talk us through your view on East African Cables?
I think, yeah, East African Cables done a good job of diversifying their client base and product range. So they are seeing the fruits of many years of hard work on that coming through. They've been quite actively marketing, so it's probably looking as a good turnaround story in terms of profitability.
Sorry, Paul, I actually said East African Cables. It's actually East African Breweries that's out with results this morning. But let's take a look at foreign participation on the market. The foreign participants are down at around 39% of participation. We have seen them pretty at higher levels in months before.
Yeah, I think this time around is probably more an increase in the level of local institutional investors who are taking a more active part. I think if you look at the absolute numbers, foreigners are probably playing the same levels as they were previously. But in relative terms, they have perhaps been pushed back by the local institutional investors. And again, that probably boils down to the drop in interest rates as local investors then, who are perhaps capitalizing on the high interest rates on T-bills and T-bonds, now saying perhaps this is the time to look at the equity market and to begin to bargain hunt on the equity market.
The central bank has been quite active in the shilling space, mopping up a quite significant number of shillings on the market. We did see them coming in the market in yesterday's trading session, something that they've been doing for the past while. Your thoughts on the central bank's efforts to continue to dry up liquidity within that space?
Yeah, I think the market's still quite liquid, and I think despite what central bank is doing, we are still seeing significant amount. I mean, the treasury bill auctions are indications of the level of liquidity that we have in the market at the moment. I think you're looking at a point where, at the same time, the central bank rate is coming down. So despite the some mopping up of that liquidity, the point as on a longer term basis is that that situation is probably not a long-term position, and we should begin to see perhaps a slowdown in the level of repo rates as we go forward.